Hello, my name is Steve Bigelow with the Candlestick Forum. We're seeing a kind of a divergence in the markets. The Dow, as you can see, has been selling off ever since the alert over here when they gapped up in the overbought condition. Doji, hanging man, closed below the T-line. And then we had another failure at the T-line with a shooting star. Now, over the last couple of days, we've had a bearish doji sandwich, which implies that anything related to the Dow might be selling off. Well, at the same time, the NASDAQ continues to use the T-line as a support level, and not only the T-line, but the 3 T-line. Just logic says if the T-line is still maintaining, let's say it the other way around. If the 3 T-line is still maintaining, that means the T-line is still maintaining. So right now we've got a very sector-specific market, which means we've got strong sectors. There's still strong stock trades in the electric vehicle stocks, the biotechs, and the oils right now should be shorted. But you can see in the electric vehicle sector, Lucid, ever since the fry pan bottom breakout, has been using the T-line rule that as long as we do not close below the T-line, the probabilities are extremely strong that the uptrend is still in progress. Note where this closed on Thursday. After some selling, gap down, trading well below the T-line, they closed it right on the T-line. The T-line is a very high probability trend factor that if you utilize that, it keeps you from getting whipsawed in and out of positions. So the electric vehicle sector is still acting strong. Look at Tesla, the bellwether of the electric vehicle sector. You had a left-right combo followed by a doji sandwich above the T-line. After coming out of this big fry pan bottom, look for your J-hook pattern to continue more upside. And there's a new dynamic right now in the electric vehicle sector. Apple came out and announced that they were going to have their electric vehicle ready in 2025. Now, this can definitely change the whole dynamics of the electric vehicle sector, which means you want to pay close attention to what it does to individual stocks. There'll be some electric vehicle stocks that are going to be adversely affected by Apple coming in as a big competitor. The biotechs are also still working well. This, we recommended EYPT because this is the end of a big 6-month fry pan bottom. And this is not an unusual occurrence at the end of a fry pan bottom, a lot of whipsaw. That tells you there's a lot of stock exchanging hands, but it usually implies that the fry pan bottom breakout is in progress. However, there's a good number of biotechs still working very well. On the other hand, the oil stocks are selling off hard. We recommended going short on Valero because of your bearish best friend below the T-line, and then your doji sandwich telling you there's more downside. So this is why specific sectors are acting bullish and other sectors are acting bearish. If the overall market trend is just kind of divergent, I guess, you want to at least have your money positioned in both directions because there's going to be good profitability in both directions. I know we're heading into the holidays, so what we're doing is we're going to be doing a free training session on November 27th. That's the Saturday after Thanksgiving. Figured if people needed to get away from their grandkids or get to a quiet spot, we're going to be doing a session on November. What the heck is going on here? Why does this keep flipping? We're going to be doing a free session on when should we start looking to see if when this bull market might be coming to an end. Now, it might not be, but there's indications that we can identify using candlestick analysis to tell us when the overall investor sentiment is starting to change. And that's also leading up to our mini spotlight training on December 4th, which is how to use the high probability trade setups that get you into, what the heck is going on here? Get you into ultimate day trades. This is strictly for day trades. It's also excellent entry points for swing trades, but for the day trader, it allows for that high probability trade setup that tells you not only are you going to be trading positive, but probably with a good magnitude move that day, trading positive. So that will be it. Whoops, now we can go. We'll see you in the chat rooms.